We're joined by Anuj Puri, who's the chairman at ANAROCK Group, who joins us now. Welcome to the show, Mr. Puri. My first question to you would be that, given the kind of bull run the entire residential space has had over the past 2 years, that is kind of tapering now. Absorption rates have gone down by 11%. So, your expectation in terms of how real estate will play out in the next few quarters, how do you think the entire realty space will move towards to?
Thank you very much, and very good morning to you as well. It is true is that the quarter Q2 of this financial year has shown 11% drop in terms of the sales, or as you said, is absorption. I think there are 3 or 4 reasons for that. One was the monsoons were very heavy. Shraddh were in this quarter, and there was a bit of an overhang of the elections that were coming in. We are hoping that this quarter now that we've set up from October to December is a much better quarter in terms of the demand coming back. But a couple of good things also happened last quarter. One of them was that the sales continue to be more than the new launches, which meant is that the overhang of the inventory continues to go down. And the second is that the price rise started to stabilize. Prior to that, we had seen very aggressive price rises. The developers become more realistic, and we are starting to see price rise still continuing, but it is almost coming to the inflation levels. This quarter is going to be crucial because this is a festival quarter. This usually in the past we have seen Diwali, Dussehra, Christmas, New Year usually is a very strong quarter. So we're hoping that there will be a bounce back that we will see from the drop that has been experienced last quarter.
Hi, Mr. Puri. Anushi joining in here. I want to understand more on the price hikes that you've mentioned about a double-digit growth that we've seen, and Hyderabad has recorded a 32% of a jump itself. So with this kind of price hikes that we are seeing across the top 7 cities, what would that lay an effect on the launches that we are seeing at, and also on the inventories? I want to understand the threefold effect on the inventory levels, on the launches and the price increases. So when can we expect these price increases to go on as well?
So I'll explain that, and it's a very pertinent point that you mentioned. Is the way the developers are really looking at it is the price rise is in line with the inflation rate, but the moment the financial closure happens through the sales, which means they've been able to sufficiently sell the inventory through the sale proceeds, they will be now able to complete the entire development. They start to increase the price very rapidly, because they are almost home at that time, knowing that the sales will be able to cover the entire cost of construction of that particular development. So that's the way that the developers are looking, until such time that they are able to cover the cost of the development. They are not very proactive on increasing the prices. Once they know that our cost of development is now fully covered through the sales price, then there is a stark increase in the price. And you would have noticed it that largely that comes in when the project is completed and there is unsold completed inventory, which is where we see this double-digit percentage growth. So very, very smartly, the way developers are positioning, probably 5 or 6%. Growth in the rentals in the sale price per annum to cover to the inflation. The moment they cross the threshold that the entire construction cost is now being covered through the sales, they increase the price very rapidly.
Understood, Mr. Puri. I want to understand what's the impact of this on demand, and what are the demand factors that one needs to look out for, because it's been so strong, right, the last couple of years. Also, there's plenty of tailwind, rates likely to come off. You've seen the peak of the rate hike cycle already being captured completely. So what's the demand concern for you? Is pricing one concern? Because that's something that I hear from you right now.
I think there are 3 or 4 concerns from my side. Obviously, as you rightly said, there's a lot positive going. At this moment in time, the way economy is going, the stock market, the job creation. I must also highlight is that this calendar year, 24, will be the best ever year that India has seen as far as office leasing is concerned. There's nearly about 72 to 73 million gross leasing, which is like clearly way out of the park. Prior to that, 2019 was the best year, which was about 55 million square feet of gross leasing. That shows that the job creation in the IT sector is going on strong, and this is largely the global capability centers coming into India. So rightfully, there is a lot positive. I think on the negative side, I have three or four concerns. One is that because the launches have been more lackluster in comparison to the demand, I don't want this demand-supply balance to really tilt in favor of the demand. That is where the developers then discover is that demand is far greater than the supply, and the prices start to grow rapidly, and which does then impact the sentiment, and the cycle starts to then have nervousness. The second is I hope that the investor speculators do not get into the market. There are some markets where we have seen some of the speculators getting in because of the price rise. I hope that that phenomena doesn't get penetrated across India. And the third is I do feel there's a lot of consolidation amongst the developers that have happened. I think India needs more developers. It needs more supply coming in. So those are my sort of concerns. But overall, on the demand, it continues to remain strong.
All right. Mr. Puri, very in brief, I want to understand the breakup. In the luxury side, we are seeing more supply coming in, whereas the affordable side, we are seeing a continuous downtick here. Can you expand more on this?
I think the way to look at this is that the growth in the luxury has been far steeper than what we have seen the growth in the affordable, because the overall pie has expanded. As a result of which, the percentage of affordable housing in the overall pie has gone down. That doesn't necessarily mean that the affordable housing, supply hasn't come out into the market. It only means that that supply has been slower than what we have seen in the luxury and the ultra luxury. The reason for that is that luxury, ultra luxury has been selling beautifully, and the developers make a lot more profit margins on that. Hence, they have been focusing on that part because the profit margins are much higher. That's why you see is whilst affordable housing is increasing, but the percentage of growth is much lower than ultra luxury and luxury resi.
Okay, plenty to look out for. This one's been a total belter in terms of how realty has performed, especially in markets. Thank you so much, Mr. Puri, for that perspective, more of an industry perspective, but thank you for that.